Hello, everybody, and welcome to the 36th edition of LM's Weekly Wrap, our weekly program to cover all the developments in the market, what has happened in the market, what is expected going forward into the markets. First of all, as usual, we start off with the international developments. This week was very crucial because we had the FOMC meet, and that was going to provide an important direction to the market. On expected lines, the interest rate was hiked by 25 basis points, and the comments from the Federal Reserve were more or less on expected lines. But what really spooked the markets was the comments by Janet Yellen and regarding the no blanket guarantees will be provided for the deposits. Now this has again raised some doubts about the quality of the banking system, the regional banks which are under a lot of pressure in the US. Although we are beginning to see some moderation in the statements also which have followed up after that. So it becomes a kind of a wait and watch situation as far as the US markets are concerned. Some experts have opined that going forward in an attempt to tame the inflation, it is quite likely that the growth might be impacted in a severe way, and that's being reflected in the hiring outlook, which has been quite tame as far as the IT companies are concerned. Having said that, I think we had the hiring outlook from Accenture, and they've decided to cut about 19,000 jobs. And all this kind of paints a kind of a bad picture for the overall global economy. Some experts also have opined that we might see an S&P 500 earnings downgrade in the near future, which will set a tone for a further fall in the markets. What happens, I think, is something which we have to wait and watch. And domestic markets have been taking their cues from the international markets. So I think as far as Indian markets have also been concerned, we have been kind of moving in a very, very narrow range. This week was a kind of a week where we saw very limited action in a very, very narrow range. So starting off with the different sectors, sectoral outlook, I think first of all we start off with the auto sector. I think during the week the auto companies have announced the price hikes, and these price hikes are basically to compensate for their emission norms. So with stricter emission norms requiring more retrofitting of equipment, most of the companies have passed on these price hikes to the final consumers. So we've seen Maruti announce price hikes, we've seen Hero MotoCorp announce price hikes. Overall, the outlook for the auto sector is beginning to moderate a bit. We saw last year that entry-level passenger vehicles are seeing muted demand. We are seeing two-wheelers also face a lot of muted demand as far as the rural India is concerned. So rural markets also have been quite muted as far as the overall auto industry is concerned. The outlook for the utility vehicles also seems to be moderating a bit. There are several reasons for this. One, the cost factor is very high. Companies have hiked the prices on account of the revised emission norms, on account of the input pricing pressures. The pent-up demand which was there is also kind of moderating. We had an exceptional year on account of the festival sales also, as well as the marriage season, etc. So all that is kind of moderating a bit. So this is one factor. Another factor is that rural India is quite apprehensive about the El Nino factor also. Although we'll get a more clarity about El Nino in the months of April and May. More clarity will emerge over there. But the kind of climate change, the kind of unseasonal rains which we have seen in the past week are also kind of a testimony that the inflation will definitely flare up from the current levels. So these are all concerns as far as various sectors are concerned, and in particular the auto sector. This is the auto sector. So this is one factor. The second is auto ancillaries. If auto gets impacted, naturally the auto ancillaries are going to be under pressure. So we could see a moderation over there too. Although we have a very different kind of pedigree companies which are available at quite decent valuations. For example, Sona BLW Steering it's looking quite good. We have Bharat Forge, which could have a very strong outlook going forward into the new year. So there are pockets of excellence over there. So one can definitely look at these companies going forward. The third sector is the banking sector. I think the banking sector outlook also is looking quite challenging because while the loan growth has been quite strong, I think going forward from FY24, the NIMs are going to come under pressure. That is a net interest margin, because the cost of deposit mobilization is going to go up substantially. So banks and NBFCs are definitely going to see pressure. And we are already beginning to see some distinction where in today's trade and during this week we've seen PSU banks come again under pressure, whereas the private sector banks like ICICI Bank or the Kotak Mahindra Bank, HDFC Bank, they began to perform quite well. So the banking index has performed relatively quite well in this week, although we expect it to be under pressure in the near term on account of the fact that the weightage of the banking stocks in the overall Nifty remains quite high. As far as this week is concerned, we had two sectors which are under tremendous pressure. One is the IT sector, information technology space, and the metal space. Both of these sectors have lost around 3% in trade during the week. And this, as we already discussed, is IT is on account of the Accenture related outlook and the global developments. We are seeing that the hiring outlook has been under pressure. Apart from this, we have metals, which has been under tremendous pressure, and in metals we have seen particularly stocks like Hindalco, Nalco, Vedanta, which have been under pressure in the markets. Steel stocks continue to do relatively well. So we have Tata Steel, JSW Steel, Jindal Steel and Power, which continue to do relatively well in the metals space. In the pharma space, we've seen tremendous pressure. We've seen a lot of companies, frontline companies, also under quite a bit of pressure. We have Cipla, we have Dr. Reddy's, we have companies like Laurus Labs, Ipca Labs, which are all ruling near the 52-week lows. So I think that continues to be a pain point. So I think having said that, we've covered majority of the sectors. As we have seen, barring I think capital goods, which is looking quite good in terms of the order books, etc., and the infrastructure space, none of the sectors are in a position to give any leadership to the market at the moment. So I think markets are confused on that account. The two biggest weighted sectors, if one were to take into account, that is the IT and the banking, both are reeling under some sort of pressure because of the FII related factors. And as we have seen in the budget also, that the thrust on infrastructure development in the economy, the thrust on railways, etc., that is turning out to be true. We've seen in this week Larsen and Toubro, which has gained orders to the tune of 9,500 crores. Plus, they have also tied up for electrolyzer manufacturing technology. So a lot of developments are happening in the background. A lot of scripts are moving around in the background, but I think it will be easily advisable to say that one has to be very, very script specific, one has to be very, very company specific, and whatever growth is going to come, it's going to be very, very company specific, and it will depend on the quality of the financials, the quality of the management, the quality of the technology which the company has got. So I think that kind of sums up the session from our side, and it is best advisable to exercise caution in the markets. If you are looking at investments, then one can definitely look at our weekender stock ideas. Some of our weekender stock ideas have performed exceptionally well in the recent past, whether it is the likes of Action Construction Equipment or HBL Power Systems or JK Tire or Titagar Wagons, Ramkrishna Forge, etc. And I think in yesterday's trade we had development in JK Tire, where an arm of the World Bank, that is International Finance Corporation, has decided to pick up a 5.6% stake in JK Tire by infusing 240 crores in the company. This will help the expansion initiatives of the company. At the same time, IFC has also picked up a stake in the EV division of Mahindra and Mahindra. So a lot of developments happening on the EV, that is the electric vehicle side of the business. We've seen the follow-on public offer also from HAL, and it's received a good response, Hindustan Aeronautics Limited. So our themes of the railway related developments and defense developments, that continues to do quite well. And rest, I think we'll keep you posted on the market developments going forward. And with that, we come to the end of our session. Kindly revert back to us with your feedback on our program. Thank you, everybody, and have a good weekend. Thank you.